Hey, good evening, everybody. Good evening. Listen, get on in here. Get on in here. Today is going to be an awesome topic. Today is going to be about your children. The conversation we're going to have today is going to be about your children and how to get them in position to be financially wealthy, to be in a better position than you're currently in. Today is going to be how trust fund babies, are created, right? So listen, everybody get on in here. I can't wait for this one. This one is going to be an extremely awesome topic that we're going to talk about today, right? So listen, um, as we get started, I want you to think about your children. I want you to think about where you want your children to be 15 years from now, 20 years from now, 30 years from now. I also want you to think above your children. I want you to think about your grandchildren, a legacy, things like that, right? Um, the reason or what separate um trust fund babies from an average, child or average person is nothing but just planning, right? It's nothing but just planning. Okay. That's really what separate um that's really what separate us from children who came out and in position to start to create wealth. It's just planning and following through with it, right? Most parents insure their child, their car, their phones, even their pets, even their dogs. But the one thing that they can't replace is their child's life and their child's health. And I'm not here to be overly dramatic, right? I'm just here to be truthful. Um, I've been in the industry now for about 18 years. I've delivered death check, I've delivered health crisis check, right? I've seen things that disturbed me, things that made me feel like in my mind start to get me to prepare for my children, right? Most recently, I had a real good friend of mine, and I shared the story the past few weeks or so that as an agent, I wish I would have done better, right? And she just lost her child about a month and a half ago, but I've known her for almost 30 years. And I talked to her maybe twice about getting insurance, and I never said anything after that. And the daughter went to a coma. She got sick. She went into a coma, and she passed away. Right. And it didn't have to be that way. Right. And here's the deal: when tragedy hits, grief is hard enough, but when you take grief and combine it with a sudden bill, this is how families get financially crushed. Right. So what we're gonna do tonight is I'll show you why children insurance is not about expecting the worst. Is really literally just about protecting your family from financial trauma, right? And protecting your child's future and insurability and wealth option, right? Most people don't realize that most trust fund babies are created by way of life insurance. Most trust fund babies are created by a way of life insurance, right? And here's the thing: the three reasons why parents get insurance for their children. There's really three main reasons. Number one is the unforeseen, the unplanned happen, right? So for final expense situation and then time off. Listen, I always tell people this, right? I always tell people this. Life insurance on your children is never about money. Life insurance on your children is about healing. Is the trauma that you're gonna go through, right? The counseling you're gonna need, the therapy you're gonna need. You know, if I go back to the young lady I was just talking about, she just put a post up today, still grieving. It's about a month and a half now. I don't think that pain is ever gonna go away, but I know for sure that first year you're not gonna be the same. That first year you're not gonna be the same. And in her situation, she also like the way I found it out that her child was sick or was or yeah, her child was sick and in a coma. She had called me at the hospital trying to see if she could get life insurance on her because she didn't have any. Right? I'm not sure if you guys know this, but even a modest funeral service can cost thousands of dollars. The National Funeral Directors Association lists the median cost in 2023 for viewing and burial was about $8,300. The average American has less than $500 in savings. And for cremation, as of 2023, it's about $6,280. The average American has less than $500 in savings. So not only did your loved one pass away, now you have to go through the embarrassment of GoFundMe and having to ask friends and family for money. When parents are grieving, they often miss work, travel. They're going to need family support and some form of therapy. Except my very first death check was for a child. It wasn't somebody that I did personally. It was my manager, and he took me to the appointment. This was years ago. This probably had to be like 13, 14 years ago. To go deliver that check to the mom. It was a child, by 8 years old, that drowned. And when we parked in the development, as soon as we came out of the car, you could hear the screaming, the crying, like because the day that we went there, she had, I forgot what they call it, but the whole family was there and things like that. And it was the most disturbing thing I've ever heard. I've ever been a part of, because the crying, the screaming, I mean, it was wild. And having to go through that at the same time, try to figure out how to pay your mortgage and your car note, take care of the other kids. Because most likely up here, you're probably not going to be able to function. You're probably not going to be able to do your job at work. But just the reality of life, the bills don't stop coming. So I tell people, life insurance for your children is really grieving money because you're going to need it. If you're on this live right now, you're watching, right? I want you to just imagine a situation like that happening to you. And I want you to ask yourself, could you function? Like, could you literally go to work the next day after your child is buried? Could you really do your job? Could you really focus on the other children? Could you really do anything? Right? Number two reason why parents get insurance for their kids is insurability and protection. You guarantee their rate. So when they get older, no matter what happened, they're already covered. And again, I've been around for about 18 years. And I'm gonna share a story with you guys. Um, Over here in Randallstown, Maryland, in Baltimore, I did a policy for a husband and wife in the Caribbean. And I remember I was telling them to get a policy for their children. And they was like, oh no, we don't talk about that with kids. We don't know, we're good. But something in my spirit just kept on telling me, keep staying on them, keep staying on them, keep staying on them. And I eventually was talking to the mom and she said, you know what? I thought about what you said. Okay, no problem. We're gonna do the policy for the kids. And it did about 250K for each child. Fast forward 8 years later, the middle child ended up, getting pregnant, having a baby. And for that incident, from what they say, that pregnancy triggered her lupus, right? Because the policy I put together had living benefits that's tied to it. That's what allowed the mom to be able to stay home or at least minimize the amount of work hours that she worked so she can help her child go through this phase of life. That money also came in to help pay for bills, medical bills, household bills. So, we don't. It's something that you don't think about, or you don't want to think about when it comes to your children. But if you call St. Jude's, they will tell you how many kids they get in every day for cancer, things like that. So things happen to children also. And it makes, to me, it's better to be prepared and not. I will always tell people this. If you guys have ever seen the movie John Q, if you haven't seen it, it's a Denzel movie. You guys should go watch it. And in the movie, the child has some kind of heart condition. And for the life of them, they couldn't come up with the money for the surgery. They tried to sell in the house. They broke the bank. They asked church for money. They asked friends and family for money. They just could not come up with the money. And I believe, if I remember correctly, in that movie, I believe the surgery was like 250K. And that movie was probably maybe almost 20 years ago. So 250K back then will probably be equivalent to maybe 300 something K, 400K today. And Denzel had to go to the extreme of terrorism in a way, right? Which he pretty much held up the hospital, had some people hostage. Now, why am I using that as an example? Because if they had an insurance policy that had living benefits tied to it, none of that would happen. And I know that was just a movie, but things like this happen every single day where a child falls sick and parents are scrambling, trying to figure out what to get the money from to save their child. And it could be something as simple as having a life insurance policy for the child, right? Number 3 is the long runway for cash value growth. The way you amass wealth is time and money. Time and money. I'm willing to say time is probably the most important thing that you need in building wealth, because you can always make money, but if you lose time, you lose the potential of massive wealth growth. So when they're little, and we're going to go over that, I'll give you guys some example as to what I mean. When they're little is the best time to get them coverage. Think about it. If you have a 1-year-old, for example, and you've been saving for that 1-year-old for like 40, 50 years, plus interest, how much do you think that child will amass compared to that child wait until they're 40 or 50 years old and now want to run around and try to figure out how to invest and save money. This is how trust fund babies are built, right? I'm a, I'm a, I'm gonna share a story with you guys, right? My mother's a nurse, and she used to take care of this lady in Chevy Chase, Maryland, in this well-to-do retirement home in Chevy Chase, Maryland. And the lady, the room that she was in was probably no more than 700, maybe 800 square feet at best, I believe. And she was paying 10 grand a month for that room. And my mom had been caring for this lady for over 5 years. So they became close. So my mom just happened to ask her one day, hey, let me ask you a question. Because my mom get all her bills for her. She had my mom open the bill, rip some up, shred some, and things like that. And I think my mom finally eventually came across as to how much this room cost this lady. So my mom asked her, hey, how were you? Because the lady at the time, I think, because I met her. One time I went to have lunch with my mom, and I met the lady, very nice lady. So I think she was probably like 80 something, probably almost close to 90 though, probably like 87, 88, somewhere around there. So my mom has been caring for over 5 years. There was another lady that was caring for her before my mom got this lady for probably like another 5 or 7 years. So that lady been there for a minute. So my mother asked her, hey, where'd you get the money to be paying for this 10 grand every single month? And the lady told my mom that when she was a baby, her father opened her a life insurance policy. And that's where the money is coming to pay for this facility. And she called my mom Abby. She said, Abby, come here, let me tell you something. So my mom leaned over and she said, even when I pass away, my kids are probably going to get like $5 million divided between the four of them. So can you imagine? You've been there for over a decade, paying 10 G's a month. And then you pass away and you're still transferring 5 G's over to your children. So when you guys hear trust fund baby, I want you to understand the basis of where it came from. It's life insurance money. And this is what I want to talk to you guys about today, because a lot of people, right now in America, 48% of the people don't have life insurance. And children are factored into that. So not only do grown adults don't have life insurance, their children don't have life insurance. Or sometimes you might have the grown adults have life insurance, but they don't want to talk about their kids. Like, no, I don't want insurance for my kids. Right? But the way the wealthy have been doing it is what we're talking about today. So they didn't get money just out of the sky. No. Everything is based on planning and following through with the plan. Like the information I'm giving today, I'm willing to bet 90% of the people would not follow through with it. A lot of people are information gatherer, but most people don't follow through. And that's why success doesn't happen. It's real simple. It's almost like you start college and you stop 2 years in, 1 year in. You don't follow through. Then you graduate, and then 4 years later, 5 years later, 10 years later, you're seeing other folks who may have graduated and got the degree and they're doing better than you because they follow through. That's the easiest way I can explain financial success, is that most people will get the information. And I don't know how many seminars that I hold. Usually if I hold a seminar and 50 people comes in and they eat food, they get information, they get brochures. In most cases, 5 at best follow through out of 50. in most cases. I'm not sure if you guys have ever heard this story. You guys can look it up, right? It was a reported case out of Texas. A 14-month-old, I believe her name was Makaya Amrani, I think is what it was, right? Was critically injured in a preschool crash and later died after days of intensive care. And reports noted that the family lacked health insurance, right? And so they didn't have health insurance for that child, which is another crazy situation, right? And then guess what? The child died. Now they received a $380,000 hospital bill plus funeral related costs, and the family had to turn to GoFundMe. You guys should, if you guys go to the San Antonio Express News and research this, it's there. Can you imagine your child passed away and now you receive a bill for $380,000 for the health care that doing intensive care for that child, and then you still have to bury the child with the funeral cost? So I know they didn't have health insurance. I know for sure they didn't have life insurance. Imagine trying to bury your child and then the hospital bill shows up. That will literally destroy your finance. So this is what I mean when I say tragedy doesn't just break hearts. It can break the entire household, right? Now tell people this. The reason why I always gear people towards life insurance with living benefits, not just life insurance, right? Because life insurance itself is not health care, but policies with living benefits, right, can create a cash resource during a medical crisis. I'm gonna give you an example. One of my good friends that I've known for probably 30 years, been a client of mine for maybe 10 plus years. She got diagnosed with cancer, I believe it was about 2-3 years ago. Her policy was around 300 some K, right? And we filed a claim for her. And it was the simplest thing to do. I was amazed as to how fast she got the check. We filed the claim because all she needed was a letter from the doctor saying that she had cancer, this what stage the cancer is, and blah, blah, blah. And we sent it over to the insurance company. And they sent her a check. Well, she requested because she had about 90% access to her policy. But I believe she requested an equivalent to her 1 year salary. And she did it that way because in her mind, it will allow her to stay home and just focus on healing and getting better while the bills are getting paid. So the policy itself gives you access to cash. So it's not health insurance, but in the event that some massive health situation happen and you need a huge lump sum of money, that's what it does. The money can create a cash resource during a medical crisis for travel, lost income, specialized care, child care for your child while you're trying to heal and get better, and just a bunch of things. Even in the US, right, families are increasingly turning to crowdfunding for funeral costs because they can absorb the expenses at the worst moment. If and crowdfunding is simply GoFundMe. if your emergency plan is well figured out, that's exactly when GoFundMe becomes the plan. And I'm not judge. I don't want you guys to think I'm judging people. I'm just saying we live in the United States of America. And when you have things such as life insurance available to you, and you don't have it, and then something happens to you or your child, and you have to rely on GoFundMe, I don't know if that, because even if you were to get money for the funeral, right? What happened to you now being able to regroup and recover? As a matter of fact, let's put funeral to the side for a second. Let's say your child had a condition that a specialized care could have helped resolve, but because you don't have the liquid money to do it, your child ended up passing because of it. This is why I always go back to that movie, John Q. If you guys haven't seen that movie, you should go watch it. If you guys haven't seen that movie, you should go watch it. We're on the live right now, right? If you have children, I want you to type in the message, child. Let me know if you have a child. Is anybody in the live? Do you have children? Miss Cooper, child. Miss Morris, grandchildren. Listen, if a child gets diagnosed with a serious illness, right? In most cases, if it's a mom and a dad household, somebody will have to cut the hours or literally stop working just to care for that child. And again, I gave you guys an example earlier of my client in Randallstown. That's literally what she had to do, because either she was calling off for work or she will get to work, something happened, she has to leave work. So her triggering the living benefits for that child's policy allow her to just stay home for a whole year. Her mortgage can be paid, car note, utilities, groceries, bills for that child. And her mind is focused now on just taking care of her child, instead of having to worry about how she's going to take care of the child, how she's going to pay the bill, she has to get to work on time, all this crazy stuff at the same time. So what the life insurance with the living benefit does is it gives you a financial buffer, right? It gives you a financial buffer, right? In the event that something like this was to happen to your child. If you're in the live right now, how many people have considered getting life insurance for their child? How many? Was it a thought? Have you guys ever considered it? The information I'm giving you right now on the live, let me know if it's something that somebody has talked to you about. Yes, no? What I want to do now is go over, because a lot of people don't really understand what living benefits is. Most So living benefits is almost like long-term care. Even with that, most people don't understand what long-term care is, right? And most life insurance, especially if they're older, if your life insurance is older than 10 years, there's a high likelihood you don't have living benefits. Okay. Um, it's a it's a new it's a new thing, but it's also so pretty much again, if your policy is longer than 10 years old, I mean, it's older than 10 years old, there's a high likelihood you don't have living benefits. And let me go over exactly what living benefits is. Um, it pretty much covers three things. Number one is long terminal illness. And if you're on the live and you don't know what that is, let's say a person goes to the doctor and the doctor say they have 12 months to live. That's what you would consider a terminal illness. Okay. Then you have what's called chronic illness. And by definition, if an individual is unable to perform 2 out of 6 of the daily living activity, bathing yourself, clothing yourself, toileting, um, feeding yourself, things like that, as long as you're not able to perform 2 out of 6 of the daily living activity, at that moment you're defined chronically ill. Then you have critical illness, cancer, heart attack, stroke, dementia, Lou Gehrig's disease, stuff like that is what they will consider critical illness. Living benefits are not a blank check. They are triggered by specific definition and paperwork and medical certification, and they reduce the remaining death benefit of your policy, just so you guys know. So, for example, if your policy was $500,000 and you triggered the living benefit side of your policy for $100,000, that now leaves your policy with $400,000. Okay. But to me, I don't have a problem with that, because guess what? If you're in a situation where you actually need that money, again, in the situation of the story that I talked about with Jung Hugh, and if that money was able to save your life, that's what it's there for. If that money is if that money will allow you to come back to a normal life after your health condition is over, that's what it's there for. Right? there are some massive financial damage from a child's health crisis, and most people wouldn't even realize it. Sorry about that, guys. And most people won't even realize it unless they're going through it. Most people are not prepared for it. Number one is lost income. Number two is travel and lodging, going back and forth with that child. Specialists out of network. Therapy and home modification. I have a client in Lanham whose child is on bed rest. Like, I think forever. And she had to remodify her entire house. There's a nurse there constantly. Right? The child's father, which was her husband, had passed away a few years prior before the child got sick. And I believe the husband left about 500 grand. And all that money right now is probably almost all gone now, because that's how she was able to get all these things that she's doing for that child, the care, the remodification of the house. Yeah. Mental health support for the family is a cost for that. Your child don't earn income, but your child can absolutely create a financial emergency. And today I did say I'm going to be as real as I can. These are uncomfortable conversations that people don't want to talk about. And I always tell people, especially with life insurance, the earlier you start, the better it's going to be for that child, because the cost is so low. The cost is so low. Literally, with the child life insurance, all you're doing is just buying time, and that time will ultimately in the future buy you options. Let me say that one more time. With the child life insurance, all you're doing is buying time with that policy, and that policy will buy you options in the future. By the time that child is 18 to, let's say from age 0, let's say by the time they're 18 to 25, they can potentially use a properly built IUL, let's say, or cash value policy, right, to help with college or trade school, maybe front or first business if they don't want to go to college. Okay, maybe they can use some of that money to put on the down payment on a house, so they're getting into buying their home early, so that way the home can be paid off early. It can also give the child a financial cushion during the early part of the years, right? And a lot of people, I might talk to them and say, "Oh, my child don't need insurance right now, and they're too young," right? Let me tell you why that's not a great thought process. Even if they don't need coverage now, what you're doing is you're protecting them against the insurability that might come later. I'm gonna give you another example, because I've been around for 18 years. I see about 300 clients a year, right? Another Caribbean young lady, I went to school with her. I did her policy, and I talked to her about getting policy for the kids. Again, oh no, Max. She called me Max, right? No, Max, we don't do that. No insurance on kids. No. I'm good. No problem. A few years down the line, the child already has sickle cell, but then she had an episode, which left her in a coma for about almost 2 months. Again, that's when she had called me to try to get insurance for the child. Thank God the child got out of it. She's well now. She's okay. But because she had sickle cell and because she had an episode, she can never, ever, 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 ever get life insurance. So when you lock them in now, while they're healthy, at a real low rate, right? God forbid something happen in the future. It doesn't matter. They're already covered. It doesn't matter because they're already covered. So I tell people, this. So what we're talking about today is literally what the wealthy has been doing. So when you hear the word trust fund, baby, I think people need to define it a little bit more. Because literally what it is life. The basis of trust fund is life insurance. So when you see all these millionaire kids, these billionaire kids, because their parents got them started off early. That's literally what this is. If you're on the live right now, how many people on the live right now have an insurance policy for their child? Put in the comment I. If you have an insurance policy for your child, put in the comment I. If this is something that sounds interesting to you, Miss Cooper, I. Yes. If this is something that sounds interesting to you, and whether you have a child or you have a grandchild, Miss Morris, I. Yes. And it's something that you are interested in and you want for your grandchild, right? I want you to put in the comment, secure my child. I want you to put in the comment, secure my child. I want to quickly, because I don't want this to be a long live, because it is the weekend, right? I want to go over a brief example as to how this could work for your child. So, and this is a client of mine that I did earlier this year. And she started off with this. She said, hey, I can swing doing $200 savings for my child. And then we'll increase later. Great. Now, we're doing a $200 IUL for her, $400,000 insurance policy. Now, why is that significant, right? Because so the mom, for her $500,000 policy, right, funded properly, is costing the mom a little bit under $500 a month. The child policy for $400,000, the minimum contribution is really about $89. But the mom wants to put extra inside the policy. So she's doing $200 a month for that child, right? And this particular policy is earning roughly about 6.5%, okay? Now, so the mom is going to do that for the child. Now, by the time the child is 18 years old, going off to college, there's roughly $64,000 in their cash for that child. And this is if the mom doesn't do anything else but that $200. Okay. Now, because all investment are meant to be long term. So I like to look at the long picture. Okay. Now I said, okay, no problem. If the mom is funding this, doing $200, the child now graduate college, for example, and the mom say, hey, this is what I've been doing for you. I want you to take it over. And let's say the child take it over at the age of 25 years old, and the child starts to pour into it, right? And now the child gets to the age of let's use retirement age, let's say 59. Okay. That child now has $1.2 million in there. Now, why is that important? From the age of 0 all the way to the child becomes 59 years old, they only put in $144,000 in there for that policy to have amassed 1.2 million. That's literally 10x. So when you guys hear trust fund babies, this is what they do. They buy low to get significantly more later, instead of trying to wait until that child becomes older and then you're trying to get insurance for that child. Now, that child now is now a grown adult, probably grandpappy, right? And the child, let's say the child passed away at the age of, this is a male, let's say 89 years old. So the policy was $400,000, right? That child now passed away by the age of 89 years old. $6 million now goes to the family. All this is happening because of the power of compounding interest. So remember when I started, I said the way you build wealth is what? Time and money. And this is the way the wealthy have been replenishing money, just circulating it. They weren't given money. They started with a plan and they stuck with the plan. This is literally what separates wealthy people from everyday people. Because wealthy people sit down with an advisor and get an advice. And then they say, okay, no problem. Let's implement this and go from there. That's literally the only difference between a person who built some form of financial wealth over time than a person who doesn't. Is the fact that they took action. Right? And for some of you who are watching this live who are like high earners and they want to really put a lot into a plan for their child. I had a client, and this is not, how can I put this? This young lady is a lawyer. She makes really good money. Okay. So she's able to do what I'm about to go over with you guys. But that child policy that she opened for the child is $750K policy. And she's contributing $500 a month. Okay. So there are some people on this live who can do that. You know, in most cases, when people have like one child only, this is something easier they can do. But when they have like multiple children, sometimes they might not be able to do a dollar amount like this. But this is just an example of somebody who's pouring in, extra because they want the child to have a significant outcome later, right? And the policy is $500 a month. And the insurance amount itself is $750K. Okay. The same scenario, I think. So the child was almost 2 when I sat down with her, like 1 year and a half, somewhere around almost 2, right? and she's doing $500 a month. By the time the child is 18 years old off to college, there's $168,000 in their cash that a child can use for college. Right? Again, if we take it further out, okay, that child now graduates school. Hey, this is what mommy has been doing for you. I want you to take it over. You're 25 now. You got a good job. It's all on you now. But if you continue doing what I'm doing, this is what the outcome is going to be for you. Right? And that child now gets to retirement age, let's say the age of, again, 59. Right? Now that child has $2.9 million with a total contribution of $331,000. $331,000 to amass $2.9 million. Okay? That child, again, have children, grandchildren. The child passed away, let's say age 90, 89, 90. The family now gets, remember, the policy was $750K. Because of time and the power of compounding interest, the child now passed away. The family get roughly $15 million, from $750K to $15 million now goes to the family. So this is the way the wealthy have been doing it over time. This is nothing new. So I want to take a moment today to talk about this with you guys, because a lot of people I sit down with don't have insurance on their kids and they don't want to consider it for whatever reason. These type of life insurance secure your children three different ways. God forbid your child pass. You don't have to go through the embarrassment of GoFundMe, selling t-shirts, fish fry. You can bury your child and now focus on healing. Also, the money comes in play to help you get the help and the counseling and the therapy that you're probably going to need, while still being able to take care of your child, of your other children, if you have some, take care of your bills, right? Number two, God forbid your child falls sick. And even in some cases, I didn't mention this earlier, sometimes your health insurance doesn't cover certain things. Some health insurance deny certain claims. If that was to happen, you can now look to your life insurance to get the cash money to take care of whatever needs to be done for that child. Last but not least is the living benefits. I mean, the cash value, I'm sorry, the cash value savings inside the policy itself. That child can use for whatever, whether it's college, whether it's to buy their first home, whether it's to pay for a wedding, whether it's to pay for a retirement home, vacation home, whether it's pay for retirement, doesn't matter. Okay? That one policy covers those three things. And So I just want to say this, right? An index universal life is not a magic investment. No, it's a life insurance policy with cash value tied to an index crediting method. But when it's properly designed and funded consistently, starting early can give your child a long runway to build a financial tool that they can leverage later. So that lady who I spoke about earlier that my mother took care of, from the age of 0, from the day she was born, from what she told my mom, is when her father took out a policy on her. And with years of contribution, with years of compound interest, is the reason why this lady can sit in a retirement home in Chevy Chase, Maryland, paying $10,000 a month for over a decade. And even still, when she passed away, her children will get over $5 million. Right? Most parents give kids toys that depreciate. The amount of money that most parents spend on buying clothes for the children a year, if they just took 10% of that and put it into a life insurance policy, the children will be set. I think a lot of this is lack of information. Because if you factor in how much money parents spend on children on Christmas gift, birthday, Halloween, what else is there? Like just like a bunch of things that you spend every single year on your children and no investment for them, no planning for them. If they took 10% of that and put it into an IUL, your children are on pace to being great. Your grandchildren are on. This is literally now you put together generational wealth for them. On the average, an average person probably spend maybe on clothes alone. Forget toys, forget activities. On clothes alone, they probably spend about $8,000 a year. On their kids. Every tax season, parents get this tax money. And what do? They go to Foot Lockers, Shoe City, Snipes, Downtown Locker Room, and blow that money that they get every single tax season on buying things that's not going to financially move the needle for their child. I want you, and I don't want you to comment on this, I want you to ask yourself, are you guilty of this? I'm not asking you not to buy things for your children. I'm asking you, hey, take a portion of what you get and start to build a financial future. We talking about no school loan. We talking about potentially heavy down payment on a house so their mortgage can be lower. So it's less stress on the child to pay the mortgage, which will free up more money for that child to also do other investment. Right? We talking about their retirement already set up. We talk about passing on generational wealth when that child passed away. Their children are now also second generation trust fund babies. By just taking a little and pouring into your child. Right? Christmas is coming up in the next couple of weeks. Some of you who are watching this, I've probably maxed out credit cards on gifts for the child. And I want you to ask yourself, okay, I got all these gifts under the tree, but the one gift that's missing is a financial plan for my child. Do I have any? And every single year is the same thing over and over and over and over again. If you're on the chat right now, I want you to type in, does this make sense to you? Is this something that you were aware of? We go into 2026, into a new year. This is when people start to write their goals out. Is this a goal that you have set for your child in your list of goals? Is this in there? The only thing separating you from a person who's doing financially well or wealthy is they take information in and they immediately start to attack it. A lot of people procrastinate when it comes to doing most things. I have a list of names, and I don't want to pull it because it has the person's name. I got that name in 2016. And this individual still haven't gotten life insurance. I remember sitting down with this individual 3 times. Listen, I appreciate you guys getting on the live with me today. This is your first time running across my platform. I want you guys to subscribe or follow because I bring 18 years of knowledge to you for free. I want you guys to subscribe and follow. I also want you to if what you heard today brought you some form of value, I want you to hit the like button because it helps the algorithm push it out so other people can hear this message. And I also want you to share this with other folks who might need to hear this. And if you are interested in my services, let me give you my cell phone number. And I work best with text messages. So if you call me, I may not answer, but if you text me, I respond almost right away. My number is 443-208-5480. That's 443-208-5480. Hey, listen, I hope you guys enjoyed the rest of your weekend. And thank you for getting on the live. Have a wonderful and blessed day.